Peter, tonight Trump promised to address this, nightmare inflation, but the trade war won't do that, right?
No, it won't. And look, you raise one of the many and obvious contradictions in this tariff policy, right? Trump says he's doing all this to bring down prices and to make Americans richer, and yet the auto industry, that's just one of, and maybe the hardest to be hit by tariffs. Assembly lines are going to shut down in a week or 10 days because if you can't get the steel to make the part for the engine, you can't put the engine in the car. That whole chain breaks down, and that entire industry is built on that concept. And tariffs will make auto workers poorer and more unemployed. Same thing for farmers. They embrace the president, but the last time there was a trade war, U.S. agricultural products were slapped by retaliatory tariffs from China, and the president had to come up with $30 billion in a bailout package to help them survive. Those kinds of contradictions are everywhere.
Take us through the trading picture this week in particular, the futures, the Dow, what's happening?
Yeah, so investors kind of had to reconcile those contradictions because we know tariffs drive up prices, they drive up unemployment, they drive up uncertainty, and they drive down economic growth. That's eventually going to dip into profits, right? So investors, they didn't believe Trump was real on any of this. They thought this was just some kind of a threat. So when he said finally, whatever that was, yesterday, that he was going to make good on this threat, investors suddenly had to price in a lot of risk. And that explains the sell-off that we've seen, and it wiped out all the gains we've seen since Trump was elected. We're looking here just in the last 3 days at 3% drops on the S&P, the Dow, and the TSX. And as I say, that wiped out all the gains those markets had seen since Trump was elected. To borrow a phrase from Trump himself, all that, it's just getting started.
Right. Okay, Peter Armstrong in Washington. Thanks, Peter.
You bet.